Hey, this is Jeremy Goodrich, owner of Shine Insurance and your host for the Shine Insurance YouTube channel. We're going to dig into a big question that actually doesn't get asked a lot because people are afraid to ask. So I thought we'd answer it right here, and that is, how do insurance agents get paid? There are different kinds of insurance agents and different ways they get paid. I'm going to address all of that in this video. By the time the video is over, you will understand clearly how lots of different types of insurance agents get paid. But first, let's talk about the 4 ways that this happens. The first is salary. The second is commission. The third is bonuses. And the fourth is profit sharing. There might be others, but these are the 4 primary ways that insurance agents get paid. So let's look at kind of each of those. A salary, most of us know what a salary is, a set amount paid by the agent's employer, which is not specifically tied to sales. So, okay, we're going to pay you $45,000 to be an employee of the business, and hopefully you'll do amazing work, and obviously we'll have things set up around that, but it's really a salary that is not tied to any kind of sales. Then there's commission, which is money that is tied to sales. So when you sell something, you'll get some percentage of the sale amount. That's commission. Bonuses are extra money on top of the salary or the commissions. If you sell this much, or if you hit this goal, or whatever, we're going to give you X amount of money, something like that. That's a bonus. And finally, one of the least known ways that insurance agents get paid is profit sharing. And this simply means if the company profits from the insurance policies that were sold by you, then they share some of that profit with the agent. So insurance, you have money coming in and then claims going out. If there were fewer claims than there was money coming in, that means the insurance company profits, and sometimes the insurance company will share that with the agents. So those are the 4 ways that insurance agents make money. Let's talk about the 3 ways you can get insurance, which will frame the conversation about how each of those work as far as what they make. And if you haven't watched this other video, we have it on our channel. I'll link right above here. The 3 ways to get insurance. But basically, there's going online, going to a captive local agent, or going to an independent agent. Those are the 3 ways you can get insurance. So let's talk about how each of those get paid. First, let's talk about online. So you went online to get insurance. How did they get paid? Well, those people on the other side of that phone line, or the people that are behind the web app, whatever it is, are making mostly a salary. Probably 90% of the money made by insurance agents at those big companies that have online portals or 800 numbers is made simply by a salary. Sometimes it's even hourly pay, right? There's not usually commission associated with sales. There may be some goals and bonuses associated, but not a huge amount. And there generally is not any profit sharing. So if you're going online, the people that are serving you are mostly hourly employees or people who are making some kind of salary. That's pretty straightforward. It starts to get a little more complex when we talk about captive agents. These are the State Farms or the Allstates or the people that work for the company itself. One of the nice things about being a captive agent is you make a salary that is usually more than when we get into the independents, but you're making salary as a base of your money. So you know you're going to be able to pay the bills even if there isn't a lot of sales going on. If you're not bringing in new business to the company, then you're going to make some salary. And then there is commission above that. So there's a clear structure of, if you sell X amount of insurance, the company is going to pay you a commission, a percentage commission. Oftentimes, with captive agents, the commission is somewhere around 8% of the premium. That varies between companies and between agreements and agencies, but 8% is pretty common. So if you sell a $1,000 policy, then you're looking at about $80 of commission that you're paid. So that can add up, and the more you sell, the more money you make. That makes a lot of sense. Also, with captive agents, there are often bonuses. So some kind of bonus for hitting a goal. If you sell a whole bunch of stuff, you're going to get some additional amount of money. And so that's how captive agents make their money. Independent is kind of all over the place, a little bit more free in the way it's structured. And that's because independent agencies are businesses in and of themselves. They're not part of the company. And so the business, the agency, can structure arrangements really all over the map. And so, but let's talk about it a little bit. A lot of time with independent agents, there is much less of a salary. There's much less of that safe money that you know is coming in. For some agents, there's zero salary. None of their money is made by salary. More often than not, though, there's some salary, some base amount of money that's set there underneath what you make for commission. But for independent agents, commission is a huge part of it, and that is the money coming back from the insurance company. Interestingly, I said that a captive agent makes about 8% commission. Independent agencies make about 12, 13% commission on average. So when you're purchasing a policy from an independent agent, you get that policy for whatever the price it is that says on the document. So it kind of feels like you're getting the agent for free, and that's where some confusion can come in. But the company gives them back around 13% of the premium you're paying, and that's where that commission comes from. So independent side, much more based on commission and the money coming back from the insurance company on how we get paid. Generally, there aren't as many bonuses in the independent side. Of course, there are some fluctuation in that. But then the independent side has something that really the other two don't, and that's profit sharing. And that means, again, if the company profits, if there's more premium coming in than there were claims going out, then there can be an agreement between the company and the agent that the company will share some of that profit. So the agent will make some of that money. A lot of times it's in January after the year before is figured out where you make an amount of money on top of that. So if you're buying online, well, the company has lower cost per employee because it's very stable and they're just paying a salary. The agent doesn't have as much salary movement. There's not as much growth potential in a lot of these online companies. And there isn't a ton of incentive to sell because you want to take good care of people, right? So there's definitely that. But as far as money goes, there's not as much incentive to sell in the online world. In the captive world, the company gets to have a local workforce, which is great. And the agent, they get a stable salary, which is really nice. And a lot of people like that a lot. And there's some incentive for sales, for actually making sales a little bit less than independent, but a little bit more than online. The independent, the company, has low cost before they sell, right? And until their agency force, the independent agents sell anything, the company really doesn't have to pay them anything. The company only has to pay the agents if they sell and bring in new business. So that can be an advantage to the company. The agent has huge growth potential. On the independent side, you can grow as much as you can attract people to your product, right? So it has absolutely huge growth potential and does have significant incentives based on your sales. So those are the differences in the different kind of ways that you get insurance. Independent agents can probably make more than anybody else because there's no real ceiling. They can, as much as they can go after. But captives can do very, very well for themselves too, and they have the stability. And then obviously there's online as well. All right, what's next? Well, if you're looking for insurance from an independent agent, now that you know how we get paid, please feel free to reach out and contact us. You can go to shineinsurance.com, learn more about Shine, learn about what we do, see if we're a fit for you, and go forward from there. And as always, the last step, there's 3 things you can do to make this channel bigger, better, happier, and help more people. That's simply subscribe to our channel if you haven't done that already. If you hit the little bell next to it, you get the whole, I don't even know, you get the, they send you stuff. It's pretty cool. But, bell, no bell, fine. But give us a subscription. That'd be awesome. Shoot that little like button on the video. That would be super helpful, letting people know that this was great for you. And then obviously, put a comment underneath. Did you agree with what I said here? Did you totally disagree? Are you an agent that is maybe a captive or an online? You just totally disagreed with the perspective that I came in here from. We'll put that in the comments. Let's talk about it. We respond to every single comment on our channel. And if you look at our other videos, you can see that there's healthy conversations going on under lots of them about the topic that they talk about. All right. Well, we hope this video was awesome for you and helped you to understand how insurance agents get paid. And until the next time, have a wonderful day.